All right. Good morning. This is Vince Lanci from the Opportunistic Trader, and we're discussing the gold fix. I will be terse today, um, but there will be no profanity. So let the kids listen in if you need. The topic for today is being lied to. That is actually the subtopic. The real topic is what the markets are doing, why they're doing it, and we told you so, you idiot. If you didn't listen to us, that's your fault. Um, okay, here we go. Um, didn't get a chance to make the pictures bigger. This is the second post I've put up today. The first post is actually very important. I want to draw everyone's attention to that. And especially in the community, the subscribers should want to be seeing this post because it's about the week ahead. And answer key for the busiest week of the year. Here's a jam-packed week ahead, and here's every event. Monday, what's happening today, Tuesday, Wednesday, everything. It's all there. Okay. Events, not just data that people talk about. Uh, uh, Subscribers should be listening to this. If they're not, that's their fault. That's their problem. All right. But this is a very good, and I didn't write this. I put a little editing in here, but this is Mark Chandler stuff, and it's free to all. And I have this permission for the opportunistic trader to use it. It is, I cannot emphasize how important this is. Print it out, staple it to your forehead or staple it to your refrigerator because day by day it goes through not just the data, which everyone, Bloomberg, 5 things today. Today, the ISM's coming out. That's crap. You want to read about stuff like this, uh, no escalation for 90 days. This is Monday. What's on the focus? But did you know that it's really not 90 days? It's 60 days because in 60 days, we will be putting on more tariffs. It's a lie. You're being lied to. Putin and the MBS pact, NAFTA 2.0. That's it. Read it on your own time. We're going into gold right now. This is about gold, and I have something special for gold people today. Gold bugs, hardcore gold people who want some good content to read. I got it for you. It costs $200 to buy, and if you didn't attend the conference, as friends of mine did, it cost $200 to buy. I got it for free. I'm giving it to people who are listening and subscribers. And let's get on with the post today. All right, you're going to have to again forgive me because I did not make the pictures big enough because the blog isn't auto-sized and I have not figured out how to do that yet. Okay, here we go. First of all, I didn't even copy and paste the tweets that I put out there. But for the last week, I've been saying there will be a framework, there will be progress, there will be whatever they need to save face coming out of there, and the markets will go up. And lo and behold, you were told so. You were warned. That's what happened. Whether it continues from here, I don't know. But that's what happened. Okay, so let's go. Last night today, gold is stronger as the world incorrectly, my editorial comments on my own editorial comments, perceive the rhetoric coming out of G20 is good for economies. Clearly, they are good for stocks as prices say so. But to call gold a risk-off asset and watch it rally after last weekend makes me want to strangle the media using cheap headlines like safe haven and risk off to describe gold rallies. Gold is up today, but gold did not rally because it's risk off. It's risk on. Please explain that talking bobbleheads on TV. It's because it's not a risk off asset. It's a hedge for dollar debasement. It's a hedge for currency debasement. It's a hedge for decreased marginal earnings. It's a hedge. It's a preservation of wealth. It is not an investment. If you own money, you should own gold. The other thing gold is, it's a trading vehicle. It does not offer the intraday trades that oil and the S&P do, that Larry and other people on the site get 3 and 4 bites at the apple because those are great products to trade. Gold gives you a trade a day, maybe 2 trades a week, but it's high probability and it's low risk, high reward. Okay, it has to be low risk, high reward because you only get one chance to trade it. All right. Okay. it is a lie. We don't know if it is from intent or ignorance, but you are being lied to. You're being lied to by, and this is me talking, it's not the opportunistic trader talking. You are being lied to that by people that say, we remember leading into the G20, we China wants to do a deal. China doesn't want this to go on, and then they go in and they sit down and they come out and they say, the word I used over and over was there will be a framework, and although they didn't use that, actually I did see the word in one place in the press, but that wasn't the word they used. Their talking points were progress was made. We'll continue the talks. That's framework, folks, but let's not call it framework. Let's say I was wrong on the exact word. I have no problem being wrong, but progress was made, face is saved, and we'll work on the framework later, and the details will come. Well, here's here's the next answer key for you, folks. And this comes from knowing Bayesian statistics, conditional probability, and not being a lawyer. Lawyers need facts, and people like us are mushrooms. We're kept in a dark room and fed a lot of shit. Okay, so we have to figure out what's going on without the luxury of facts that everybody else seems to have. And this is what's going to happen next in all probability. What's going to happen is, first of all, the key tell for me at the meeting, outside of all the, when you hear nothing but good stuff, listen for the bad. And the bad was at the table, they couldn't agree on a joint announcement. Now, I'm going to make this up, but here's an example of not agreeing on a joint announcement. Trump wants to say, we have a framework. We're on the same page. We love each other. And Xi's like, no, dude, we're not saying that. We're just going to continue talking. So the Chinese will let Trump save face and make whatever statement he wants to make, but they won't do it jointly because the Chinese are playing Trump. In 2020, either he's elected or he's not. So if it's right before 2020, and they could say anytime between now and 2020 election, they're going to say, you know what, screw you. We don't want to work with you again. So we're going to make sure that everybody understands that our people can take more shots to the head than you can. And they'll walk away. Or they'll say, yeah, we have a framework because they want to work with Trump. How could you not want to work with Trump? He's the man who snatches failure from, or what's the expression? He snatches defeat from victory. Okay. I'm not going to say that the NAFTA 2.0 signing wasn't a smart move to get done before getting China to the table. But guess what? You don't think China knew that? They knew that, folks. And guess what? The NAFTA 2.0 isn't done. It's signed. Now, I'm not saying it won't get passed, but Congress has to approve it. Nothing is done. Nothing ever gets done because Trump pushes like a traitor and lawyers will slow him down. That's how it works. Okay, I can rant all day on this. All right. All right, so here we go. Technicals. Let's get to the trading part. All right, Morse technicals. All right. All right. If you hear a dog sneezing in the background, that's because he gets excited when I do. I have a dog here. Get used to it. Get long above 1243 and change. That's kind of a ways away. We're talking about Feb now. Buy against 1231. So the range is 1231 to 1243, basically on his technical analysis. But the average daily ranges are smaller than that. So let's go to the VBS levels, which I think are more relevant today to tell you if we do have opportunities. All right, we're going to start with the daily. This is the Feb Gold Futures. By the way, I found the new software package that's free. I ain't getting paid for it, but I'm gonna start using it. If I can change it, I like to have a black background. I'll start using it in the next couple of days. It's really good. It's free, and I would say it copies the Bloomberg layout without violating patents in terms of how markets are organized, and it's really very good for professionals with something that want something on their phone, or non-professionals that just want to have something. Okay, so on the daily, there's nothing here on the daily that gives me the risk reward trades that I want in February. On the weekly, as I said, on the weekly, we have narrowed. We have the signal. We have 3 out of 4 indicators that says something is up. The problem with the weekly, if you're a short-term day trader, is it's useless for you. It's good for biases, but if you're a day trader, it's useless. So right now it's saying if we settle the week above 1235, spot 18, you will want to go out long. Now, how do you use that as a day trader? Well, use that as a bias. If you're a technical or a technician day trader, if we're above 1235 and change, then you would maybe look for a dip to buy or a bull flag or something like that. If you're a regression to the mean trader, something that Larry specializes in, not only he does many things, but not only does he, but that's one of the things he's very good at. If he were looking at my system, and he eyeballs it from time to time, but everyone's got their own discipline. My discipline shouldn't be yours, but I'm giving you a process to think here. We're not just giving you answers, we're giving you ways to think. If you are a regression to the mean type of trader, as long as we're below 1235 on a weekly basis, you might want to be more aggressive when regressing to the mean. Or even better, this is something that I like to do. We get above 1235, say 1240, and we break back through 1235, then I will sell the piss out of it, in a regression to the mean inversion of my own system. But know that we are on the radar for the end of the week being a beginning of a increase in volatility. All right, the hourly. What can you say about the hourly on a VBS or a volatility breakout signal? There's just no way you would have gotten in on this. In fact, you would have gotten short. You would have gotten short that evening. You would have made money. You would have gotten short, risked one to make two. You would have been stopped. You would have been closed out a little bit above 1216. I'm sorry. This is 1216. And then it just would have gapped higher and you would not have participated in that. However, the regression to the mean aspect of this, something that I didn't look at before because I could not quantify my risk reward properly. I still haven't been able to do that to my own satisfaction, is saying that below 1237.99, you should feel comfortable short, meaning the volatility based system, which visually you guys can see when Bollinger Bands widen in opposite directions, you go with the flow. But when you break back into the Bollinger Band, that's a negation. It may be a pause in the rally, but it's a negation of the impulsive move of the market. Okay. This system works. It's the real deal because it's based on volatility, not direction. But the regression to the mean, I must admit, I don't have risk reward levels in place like I do with the VBS. So if you're a swing trader, maybe you're buying a dip. If you want to see a negation of the momentum, maybe you're selling it. But I will say this: considering the dump in the dollar, gold didn't move much, which should tell you something. Is gold going to catch up? Who knows? Or is gold going to drop? The old saying is, if you're bullish gold, buy stocks. Or if you're bullish gold, buy silver, which, by the way, hasn't worked in the last year. If you're bullish gold, buy stocks is basically saying that if the dollar is going to weaken, if there's going to be a weakening of the dollar, because this is during QE based primarily, but it works in QT as well. If the dollar is going to weaken, then gold and stocks go up. Buy stocks, because the government doesn't really want gold to go up. It wants stocks to go up. Don't tell me the government does not keep a lid on the price of gold. They do. I don't have to wear a tinfoil hat. I've seen it happen. Okay. Look at the 200-day moving average in silver. It doesn't get above that. Bullion dealers have a blessing from the government to sell gold. If you don't believe me, go back to the Clinton days. Robert Rubin, when he was working at Goldman, approached Greenspan and said, "You have a lot of gold sitting in a vault doing nothing. Why don't you lend it to us? And we will give you 50 basis points a year for it." And Greenspan's like, "Sure." I don't gold. Remember, Greenspan likes gold was important to Greenspan. and he did not want it to go up as an inflationary sign. So Rubin and company, he went to Citibank afterwards and joined the government as part of that revolving door. But this is how the gold trade went down. It's the gold carry trade. This has been going on for years, and to a lesser extent now. But it went like this, folks. Rubin approached during the Clinton years. Rubin approaches Greenspan and says, "You got gold sitting there doing nothing. Lend it to us. We'll give you 50 basis points." Okay. All right. So Rubin, Goldman Sachs, and the other bullion banks get the gold lent to them. They short it in the market. They take the cash, the dollars from that, and they buy something higher yielding. This is a classic carry trade. You borrow in a currency that is not giving much of a yield, like the yen is constantly borrowed in. And then you take that and you buy something that gives you a higher yield. Now, these carry trades unwind ugly, but the reason the gold carry trade has gone on for so long is because the bullion dealers also have on their client base producers. So if gold goes up too much, they can always call a producer, or they know that they have producers who need to sell. So they have natural captive clients selling, and they have a government that, again, I'm not paranoid. This is fact, folks. This is truth. You won't be able to find the facts, but this is truth. The government is only happy to lend them more money or more gold because it's pot odds. Now, for those people who are saying there's no gold in Fort Knox, I, I don't think that's true. It's all there. It's just spoken for. This is called rehypothecation. This is the next step beyond fractional reserve banking. Anyway, I could talk about this forever. In fact, we should have a seminar just on gold where I will just sit there and answer questions. Okay. 240 minutes says don't get short yet. All right. On deck. Let's keep it this way. Sorry about that. If you want something more professional, sorry. This is about content. The content is professional. All right. You see that stuff at the top? That's my ability to edit. All right. On deck. 5 Fed officials speak today. Clarita, Quarles, Williams, Brainerd, and Kaplan. Brainerd. We're paying attention to Brainerd the most, not because I think it's a she, not a he, but there's two sexes, folks. Sorry. You may feel differently about that, but Brainerd's comments we think are the most interesting, though not necessarily the most market moving. What does that mean? Brainerd, when she speaks, draws attention to the short-term version of normal versus the long-term version of normal. I mean, neutral rates. That's important. And smart money will pay attention to what she says. Short-term neutrality versus long-term neutrality. That's my takeaway. Market snapshot as provided by the overnight report. Looks a little blurry here. My mistake. I should have stretched this a little bit better. But these are the markets. Let's get to energy. If you're a subscriber and you trade energy, you should be listening. Oil has rallied 4 to 5% after last month's 22% plunge. Russia and Saudi Arabia agreed to extend their pact, boosting the likelihood that OPEC plus, that means OPEC and people not in OPEC but kind of agreeing to it, that would be Russia, will announce output cuts later this week. Efforts to support the oil market also come from an unexpected source. The Canadian province of Alberta announced a 325 barrel a day cut starting in January. Now, I don't know who buys Canadian oil at $15 a barrel. It should be pretty cheap, but it's cheap for a reason. The cost of extracting are high. FX markets. All right. High beta dollar block and Scandi currencies. That terminology I'd love to say is mine, but it's not. It's Mark Chandler's. Are leading the move against the US dollar. Emerging market currencies are also strong. Global equities. All right. Asia, 2% up. That's more than two. That's more than it was all last week. Australia and Japan, op trader subscribers are very keen on the Aussie yen trade. So I'm giving you the Aussie and the Aussie dollar and yen separately. You combine them to make your Aussie dollar trade. You can read that. There's technical numbers in there as well. The RBA meets tomorrow. There are 1.1 billion and 0.735 strike options that expire today. Pay attention if you have something on. I would love to sell the rally in the Aussie dollar today personally. I used to be an active trader in the Aussie dollar, but I am not anymore. I had exposure in Australian equities at one time and Australian bonds. So I used to play the market that way. But I would love to sell risk on rallies because Powell's just going to have an excuse to raise rates. Europe shares are higher. You can read that on your own time. US stocks, they're higher. Okay, this is where I get a little more terse. Uh, not as high as the rest of the world. They're only up 1%. But that's because the world has a lot of catching up to. It makes no sense that US stocks remain buoyant, echoing something that Larry says using different words. It makes no sense that US stocks remain buoyant in a risk off market and also rally in a risk on play, unless, of course, you acknowledge and accept that the Fed and the plunge protection team are managing markets to control dissent on bad news. Point being that we rally when the world drops because you can make the story up because they're putting their money in US dollars and putting in US stocks, as the Swiss National Bank is doing. They print Swiss francs, they buy Apple, period. Okay. Um, but why does that? Why do we rally when everything rallies? Because the books are cooked. Boomers are retiring. Uh, 401ks have to be protected. But we're not saying to run away from these markets. Either surf the wave, fade the wave, or get the F out of the way. We're going to trade it. Fade means trade it to regress to the mean. That's a terminology. All right, gold people, look for the 300-page New Orleans investment transcript we have obtained for no cost. That is being sold by the conference people for $200. We will offer it to you gratis. All we want is an email to send it to you. Anyone who emails me or my assistant at Echo Bay will receive a copy of the complete transcript. You will also receive a discount coupon, if you want to call it that, to subscribe to the Opportunistic Trader from me to you personally. Okay, because there's only so much more of this that we can do, that I can do, facing the public for free without getting paid. That's how it works, folks. But I'm giving you a lot here, and there's a lot more that could be given if you subscribe. Real time alerts, text messaging that gives you trades that we're doing, direct messages from me, insights, option webinars that I do with Tom McEntee, the AM roadmap every day, which, while it doesn't necessarily give you a real drill down inside of Larry's mind, because only the Lord knows what's going on inside there, but it does give you trades that he does and how he does it afterwards. He can explain it afterwards, but when he does it, he's in the moment. You don't stop. Please, I'm not going to call him an artist, but you don't ask an artist in mid brushstroke why or how they're doing stuff. You wait till afterwards. Okay. For those of you that are interested in the transcript, this is the transcript. They want to charge you a lot of money from this. Why is this important? This transcript, this meeting, while it's basically a rah rah for gold, is also good. It's also good. They have some serious speakers here. You've got Doug Casey. He's serious. I think he's a little bit paranoid, but he's serious. People who like Charles Krauthammer, I actually did. I'm not a neocon person, but I thought Krauthammer did a lot of good for the world with what he did. Dennis Cartman, read that for a laugh. I have very little respect for the guy. Um, James Grant, love the guy. Uh, uh, Basically, everyone, I have the transcript of everyone who spoke here. Robert Kiyosaki, a guy who cashed in on real estate and now he's moving to precious metals. These people are just hawking shit. But the reality is there are other people that are, Chris Powell from GATA, not a, you know, GATA is financed by people too, folks. Moving on. Rick Rule um, uh, uh, fronts a professional company that is selling you gold, but he's honest. He's a good man. Peter Schiff, uh, one trick pony. The end of the world is coming, but always good to listen if you can get something out of it on gold. All right. And current status, and some serious people that they got to join there as well, discussing things like Uber, discussing commodities. If you're discussing commodities, you're discussing FX. This is a 316-page document. I'm going to send it to you at my risk of being shut down by the New Orleans conference, because you know what? It should be free. But if you go to their site, they're going to charge you for it. Email me. If you're looking at this and you don't have, go to the Opportunistic Trader website, click on Insights, and go to the post entitled Gold Fix, and you can find the email address you need to send there. And I will send in turn a coupon, depending on part of the country you're from, to do that. All right, it's 8:26. I've got to go. Don't be stupid. The market is rallying because of hope. And hope, sorry, Obama fans, because I'm not an Obama or a Trump fan, hope is the flip side of denial. Okay, they're the same thing with different words. I hope the market goes high is a person who's in denial that he's losing money by being long and the market's going down. Have a great day. My name is Vince Lanci, and we told you so.